Hi viewers, in this video we are presenting self-balancing system for JAO purpose. In the previous video we are already presented about self-balancing sectional balancing system. In the sectional balancing system only one ledger can be balanced. So in sectional balancing there is no double entry system, and also main drawback is trial balance not preparing. This drawback is removed under self balancing system, where the trial balance of each of the ledgers can be prepared. Thus it is a system where each ledger is self balancing. So the self balancing system features are: first one, in the debitors ledger, besides personal accounts of trade debtors, a general ledger adjustment account is opened. So this is the important, that is general ledger adjustment account. The account is just reverse of sales ledger adjustment account in the general ledger. Second one, in the creditors ledger, besides the personal accounts of the trade creditors, a general ledger adjustment account is opened. The account is just reverse of purchases ledger's adjustment account in the general ledger. And third one, in the general ledger, two control accounts are opened for trade debtors and trade creditors. The control account for trade debtors is termed as sales ledger adjustment account, and that for trade creditors is termed as purchases ledger adjustment account. These two control accounts are in fact total debtors account and total creditors account, as in the case of sectional balancing. Fourth one, besides passing the usual accounting entries, additional entries are passed at the end of the period for the control accounts. The subsidiary books are suited ruled in a manner that they readily show the periodic total of transaction to be posted in the various ledgers account according to the self-balancing system. And last final fifth one, since there is a complete double entry in respect of each of the ledger, the trial balance of each one of them can be prepared and the accuracy of posting made therein can be checked. So self-balancing system understanding purpose, we are giving one example here. The working of the system can be understood with the help of the following example, that is, here given debtors, credit sales, cash received, discount allowed. Debtors are A, B, C. Credit sales are 5,000, 4,000, 4,000, total 13,000. Cash received 1,000, 2,000, 2,000, that is 5,000. Discount allowed 100, 200, 200, total 500. And next one is creditors X, Y, Z. Credit purchases 4,000, 2,000, 1,000, total 7,000. Cash paid 1,000, 1,500, 2,500. Discount received 100, 150, 250. So Try to understand what are the journal entries here. First, try to write for credit sales A account debtor, B account debtor, C account debtor to sales account 5,000, 4,000, 4,000, that is 13,000 as and when sales is made. Next, self balancing purpose, sales ledger adjustment account to debitor to general ledger adjustment account 13,000 total credit sales at the end of the period. For cash received, cash account to debitor to A account, B account, C account total 5,000, 1,000, 2,000, 2,000 as and when cash is received. Next, sectional balancing for above entry, general ledger adjustment account to debtor to sales ledger adjustment account 5,000, 5,000. For discount allowed, discount account to debtor to A account, B account, C account total discount 500, each 100, 200, 200 as and when discount is allowed. For sectional self balancing system, general ledger adjustment account debtor to sales ledger adjustment account 500, 500. So these are the debtors purpose. You are trying to understand here. We have prepared 6 journal entries, 3 for normal entries, 3 for self balancing system purpose. So every entry is transferred to sales ledger adjustments and general ledger adjustment accounts. And now we are going to discuss about and prepared credit purchases. So credit purchases for first entry, purchases account to debitor to X account, Y account, Z account 7,000, 4,000, 2,000, 1,000 as and when purchases are made. Then transfer to self balancing, general ledger adjustment account to debitor to purchases ledger adjustment account 7,000, 7,000 at the end of the period. For cash paid, X account debtor, Y account debtor, Z account debtor to cash account 1,000, 1,500, 2,500 as and when cash is paid and transfer to self balancing system. Purchase ledger adjustment account debtor to general ledger adjustment account 2,500, 2,500 and discount received, X account debtor, Y account debtor, Z account debtor 100, 150 to discount account 250 and finally transfer to self balancing system. Purchases ledger adjustment account to debtor to general ledger adjustment account 250, 250. So here also we are prepared 3 normal entries and 3 self balancing system entries. So purchases purpose, purchase ledger adjustment prepared, sales purpose, sales ledger adjustment account. In both transactions we are transferred to general ledger adjustment account. So this is the main procedure for self balancing system. However, we are continued this same problem with the ledger accounts. So sales made for ABC, try to prepare A account. In the A account credit sales purpose, A account to debtor to sales account, then E is debited, so to sales account 5,000 and then he paid cash and received discount. Then cash account debtor, discount account debtor to A account. So credit side by cash account 1000 rupees, by discount account 100 rupees. So in debit side is higher amount 5000, remaining balance is 3900. That is by balance carried down. Next B account. So as usually B also same, to sales account 4000, by cash account 2000, by discount account 200. Then balance is 1800 rupees. Next C account, same as A, B, to sales account 4000, by cash account 2000, by discount account 200. Then balance are 1800. Now these entries purpose we are prepared general ledger adjustment account. So sales purpose in credit side recorded by sales ledger adjustment account. So the entry is sales ledger adjustment account debtor to general ledger adjustment account. Then credit side 13,000 to sales ledger adjustment account. Cash is 5,000, discount is 500. Then 13,000 is highest amount. The remaining balance is 7,500. To balance carried down. Then finally here preparing trial balance. Total debtors A, B, C. These are debited 3900, 1800 and 1800. General ledger adjustment account 7500. So both sides are equal, that is 7500. Next, purchases purpose. Purchases from X. The entry is purchases account debtor to X account. So by credit side, by purchase account 4000. We are paid cash and received discount. Then X account to debtor to cash account to discount account. So debit side to cash account 1000 to discount account 100. So 4000 is the highest amount. The amount is recorded in both sides. Remaining figure are 2900, that is to balance carried down. Then same as X Y account, by purchase account 2000 to cash account 1000 to discount account 100. Balancing is 900. Finally Z, by purchase account 1000 to cash account 500 to discount account 50. Balance are 450. And next one is general ledger adjustment account. By purchase ledger account 2500, cash received 250, discount 250, cash 2500. To purchase ledger account 7000. So 7000 is the highest amount, remaining are 4250. So trial balance of purchase ledger, creditors X, Y, Z, that credit amounts 2900, 900, 450. General ledger adjustment account 4250, that is debited. In both sides are equal 4250.